Hello, fellow investor. I want to welcome you to this channel. In this video, we look at the earnings expectations for UnitedHealth. UNH is reporting third quarter earnings on Tuesday, October 28th, before the market open. So what can we expect from UNH moving into the earnings? We're going to cover several topics to see how UNH is trading going into the earnings and help set expectations moving forward. We will review the current price chart and trend charts along with some key valuation, growth, and profitability metrics from Seeking Alpha. We'll also take a look at FASTgraphs. I'll also provide an update on my UNH portfolio holdings and performance. Let's get started.
UnitedHealthcare is scheduled to report third quarter earnings on Tuesday, October 28th before the market open. In the previous quarter, UNH reported revenue of $111.62 billion, beating revenue estimates by $31.15 million. UNH reported earnings of $4.08 per share, missing estimates by 37 cents. For this quarter, the revenue estimate is $113.06 billion with earnings of $2.83 per share. Over the last 90 days, no analysts raised estimates and 21 analysts lowered estimates. UNH meets or beats analysts' one-year forward estimates 100% of the time. UNH is showing positive relative strength going into earnings. The options market is pricing an implied move of plus or minus 6.9%.
Let's take a look at UnitedHealth in a one-year daily price chart. And there's a lot going on here, so I'll try to break it down step by step on what we're looking at. But the first thing we'll notice is a pretty precipitous drop in the price from about 580. We see a 609 over here down to as low as 233 in just about 4 or 5 months. So the first thing that happened here was their Q1 earnings. They shared that their care activity, which is the cost of providing care, was about 2 times what was expected, and that was going to hurt their earnings. So they took a big drop of about 22% on that news. And then in May, they pulled their full year guidance, and then just a day or two later, the DOJ, it was reported that the DOJ was investigating UNH on some healthcare, Medicare fraud issues. So that caused another drop of about 17%. And a couple days later, they were down another 10%. And then things leveled off for a while. And then at their Q2 earnings, they mentioned that their care costs were going to be about $6.5 billion more than what they had anticipated. And they did reinstate their lower full year guidance. So that caused some more price pressure on the stock, getting down to about 233. Then there was some news on the 15th of August. The 13F filings for super investors indicated that many had bought into UNH. And the most notable of those was Berkshire, and that caused the price to move up about 12% because it showed confidence from some of these super investors in UNH, and it was pretty irresistible at these price levels. These 13F filings basically covered the second quarter, so that was April, May, and June, ending June 30th. And then they traveled sideways for a while, and then on the 9th of September, They reported that 78% of the membership could be enrolled in a 4-star or greater plans, and that provided some positive price pressure, raising the price because they get greater payouts from Medicare and the government on healthcare plans. So that's where things have been reported and what happened to the price. They traveled sideways for a bit more and increased a little bit, and then have kind of leveled out a little bit more. So they're currently trading. The market is still open at the moment, and they're up about 0.86% today. I have two trend lines on here, one connecting the highs on the 14th of April to this high that we saw around the 28th of July, 29th of July. That was right before their earnings. They did fall below that, and then they broke out above that trend line, which was good, some good news. And then we had the good news on the 13F filings. I have this other trend line which is connected to the highs here, and I'm just waiting for another breakout above that line. I'll show you in a bit my purchases for UNH. I also have a Fibonacci retracement set to the level at about 233, which was the low, back up to the high we saw here. And this just allows me to keep track of how far the price has retraced from that low back up to the high. We haven't quite reached a 38.2% retracement now. That would be at about $375 or so. But this shows you resistance points as it moves its way back to its intrinsic value. We also see on here that the RSI is positive, so it's sitting at 60 right now. The price has been moving slightly higher. We are seeing lower prices in the PPO. That's referred to as a negative, bearish negative divergence. So that does something to keep a watch on as we move through the coming days and weeks. Their accumulation is near back to the highs that we saw back in May. So they have nice accumulation after the distribution here. They are seeing some positive accumulation. And we can also see that the money flow is positive right now. So over the past year, they have not performed very well. They're down about 43% compared to the S&P 500 over the last year. The healthcare sector, they're trailing that by about 33%. The healthcare provider industry group, they're trailing that by about 23%. And that industry group overall is underperforming the S&P 500 by about 26%. We can see that they have an upward sloping 20-day moving average, and they're currently trading above that. That has provided nice support from this breakout above this downtrend line. You'll notice that it pretty much continuously traded above that 20-day moving average, so that is really good news. The 50-day moving average had declined and bottomed out somewhere in September, and it is also increasing at the moment. And the 200-day sits just above the 38.2% Fibonacci retracement. So that could serve as a bit of resistance in addition to this Fibonacci retracement line. They have almost closed the gap here. So if I put my cursor at the price as it's trading today, I can see that it's just about closed this gap. So that's be an important thing to accomplish here shortly, is to break above that. They can get above that 200-day, then we could see some continued upward prices depending on their reporting moving forward. Let's look at the 5-year weekly trend chart. This compares various pairs of moving averages that represent a long-term moving average, medium-term moving averages, and short-term moving averages. So we can see over this 5-year period that most of the time, with the exception of 2023 and a portion of 2024, that they had the shorter term of the long-term average had been trading higher than the longer term. So that means these bars are in positive territory. In February, that did cross to the negative side. So for the long term, we really fell off until we got to about the end of August. And since that time, the longer term averages have been turning up, and the price action has been improving. If we look at the medium term, they were underperforming those averages. But if we look recently, for the last, it looks like about 8 weeks or so, 9 weeks, that they have been in positive territory. And also in the short term averages, looks like maybe for 12 weeks or so that they have been trading in positive territory. So if this kind of price action continues, we could expect that maybe in the next month or 2 months that they could be back in positive territory in those long-term averages. When we look at valuation growth and profitability metrics from Seeking Alpha, we can see that UNH is trading at 22.23 times on the forward PE compared to the sector median at 18.76 times. The expected EPS growth rate for the next year is expected to be down 10.8% compared to the sector median at 8.22%. The expected revenue growth is expected to be 7.84% for UNH compared to the sector median at 7.70%. And then when we turn to profitability, UNH has a net margin of 5.04% compared to the sector median at 0.23%. So we'll take a look at UnitedHealth in FASTgraphs. We can see that they have a blended PE of 19.66 times. They have an EPS yield of 5.09%, a dividend yield of 2.4%. And over this 20-year period, they've had a adjusted operating earnings growth rate of 10.78%. FASTgraphs calculates their fair value to be 15 times, and the normal PE ratio is 17.76 times. I've intentionally left the prices off this chart because I want to talk a little bit about risk management. So the market multiple is this blue line. That's the normal PE, and then the fair value is this gold line, and that's based on their growth trajectory. So they have a fair value ratio of 15 times. So anytime the price is trading above these multiples, then there's some additional risk that people are taking on when they buy at those prices. The absolute best time to buy is when it's trading under its fair value, which may not happen too terribly often, but it's important to keep in mind. During 2020 all the way through the current time, I had been listening to a lot of investors that were heavily investing in UnitedHealth. And then when they have an issue like they had in 2025, if you were buying when the price was extended above these values, then you're going to have to wait a long time to end up recovering back on those prices. So let me go ahead and put the prices back on here just so we can see what I'm talking about. So in 2007, 2008, they were trading above those multiples. They traded down to fair value at the beginning of 2007, end of 2006. They traded under those multiples for quite a few years until 2013. And at that time, people started paying more than what the market had typically applied to UnitedHealth and also their fair value. We can see a couple times where it had dipped down, giving you an opportunity to buy, but then it really got extended in 2022 through 2023 and all the way through 2024. So even though I had an interest in holding a company like this, I couldn't justify paying prices that were so far extended above the normal multiple. So this had traded up to as high as $600 at times. And if we take the price off once more and just click this market multiple here, the fair value was $491, and it extended up to $600. So people were paying about $110 a share more than the market typically applied a multiple to UNH. And it was, almost $200 higher than its intrinsic value. So let's keep the price on here. It did drop well below fair value for most of 2025. It has since crept up to be above fair value and above its market multiple. If we take a look at the earnings history over this 20-year period, we can see they had a contraction in earnings in 2008, and for the most part were growing in double digits. There were a few slow years here in single digits. 2025, we're seeing a very large contraction in earnings, but they are expected to return to EPS growth in 2026 and 2027. So when you are buying at prices that are well extended above either the market multiple or the intrinsic value, fair value, you have to have a pretty good risk management process in place to be able to detect when the prices could have a big contraction. So I first entered into UNH on about May the 9th, and I've made several purchases along the way, some at higher prices than maybe I should have paid, but I have an average cost of around $2.92. I'll do a summary here in just a few moments. But this just shows where I had been picking up shares after I first entered. I made my last purchase on September the 9th. So I currently have only 53 shares. I've invested about 15,500 at an average cost of $2.92. I have unrealized returns of 3,700. I have not sold any of the shares that I purchased, and I have received dividends of $194.48. So my current return is 25.5% or 72.9% annualized. I've made 11 purchases, so I haven't closed any, so all of those are open. All of them are winning trades, giving me a win rate of 100%. If you find these earnings previews helpful, I would appreciate you subscribing to the channel so you are alerted to future videos as they get posted. I would also be grateful if you like the video to help support this channel. I wish you the best in your investment journey, and remember to trade well.